Good afternoon and welcome to Q3 results. So the Board of Directors met on 20th of January to review the working of the company for the quarter ended 31st December, the third quarter, 2023. The salient features that the net sale during this quarter as compared to Q2 had risen by 9% at 2690 as against 2476, and if we compare the same with previous year, it is up 18% at 2281 as against 2690. The EBITDA during the quarter was 608 crores as against 447 crores in the previous quarter, an increase of 36%, and 246 in the previous year, and when an increase of 147%. The EBITDA margins for the quarter was 22.6% as against 18% in the previous quarter and 10.8% in the previous year. The profit before tax in this quarter was 415 crores as against 246 crores, an increase of 69%, and 90 crores last year, an increase of 363 crores over 363% over last year. The EPS was 37 rupees 40 paisa as against 23 rupees 10 paisa and 7 rupees 40 paisa in the previous year. So during this quarter, the company also commissioned the grinding unit of 1.5 million tons at Ujjain, and the work at the grinding unit of 2 million tons at Prayagraj is at advanced stage, and this would likely get commissioned by July-September quarter. So also the Board of Directors in the meeting decided an expansion of 6 million tons in central India, out of which the salient features of the expansion are that 3.3 million tons would be the clinker line at Panna, which would be line number 2 at Panna, and 6 million grinding unit. So grinding of 6 million is coming from 3 million of greenfield grinding in Bihar and 1 million incremental grinding by way of modifications in the existing systems at Panna, Prayagraj and Hamirpur. So that would be 6 million tons of cement grinding. This is expected at a total project cost of 2,852 crores, 2,850 crores, out of which it is proposed to borrow rupee term loan and bank and some debentures from banks of 1,850 crores, and balance would be from internal accruals. The commissioning is around within 24 months, and it is expected that the work may start sometime by March, April this year. So within FY26, we expect to complete this expansion of 6 million tons, and with this expansion by FY26, the company's overall grey cement capacity, installed capacity would be 30 millions. The present capacity is 22 millions. 2 million tons at Prayagraj is under implementation, and 6 million tons new capacity is proposed. So by end of FY26, the company's overall grey cement capacity would be 30 million tons. During the quarter, if we see the capacity utilization for the grey cement was around 75%. The grey cement volumes was 4.15 million. The blended ratio was 66%. The trade mix was 62%, and the premium product was 12% of the trade volumes. If you look at the gross debt as on 31st December, that was 4,585 crores, and the net debt to EBITDA was 1.64 as against 2.21 as on 31st March 2020. As on 31st March 2023. So these are the major highlights and the working. If you have any questions, we'll be pleased to address the same. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Congratulations, sir, for a very good set of numbers.
Thank you.
Yeah, sir, my first question is just to getting a timeline confirmed in terms of this 3.3 clinker and 6 million. So this 3.3 clinker at Panna would be starting in Q4 FY26 and 6 MTPA grinding to start by Q1 FY26. That's the fair way to look at.
No. See, by end of FY26, all this will get commissioned because we are expecting, the clinker line as we have done earlier at Panna. So we are taking an outer limit. Some approvals are pending. Once we get a consent and all, if we start work by March, April this year, we can definitely get it commissioned within December 25. Everything. The cement grinding can be completed earlier, but there is no point in completing it earlier when we will not have the clinker available.
Okay, got it. And now, considering this 2,900 odd crore kind of a capex, so what's the capex we have done in 9 months, and what's the revised guidance for FY24, 25, and 26?
See, we have done the actual capex of around 900 crores till now, and earlier guidance was 1400 crores, but we expect to close with the spillover of 200 crores. So this year the capex would be in the range of 1200 crores.
Okay.
And next year, yes, against the guidance of 800 crores. Now we will have the capex for this line 2 also, Panna line 2 and this 6 million grinding. So it will be in the range of 1200 crores and 200 crores of the spillover from current year. So next year capex would be 2200 crores.
Okay, 2200 crore. Okay. Yeah. And in FY26 would be then?
FY26 would be around 1800 crores.
1800 crore. Sorry, sir. 2000 crore and 2200 crore in FY25 and 1800 crore in FY26. Okay, got it. Now coming to the in terms of the volume and then the pricing and the profitability front. So just 2-3 things. So in terms of the definitely we are doing much better on the grey volume front. So in 9 months, we have done 21.3% kind of a growth. So is it fair to say that for the full year, definitely we should be having a 19% kind of a growth, and any broader idea in terms of the next year in terms of the volume growth, because for industry, I would say it would be slowing. So for us, how one can look at in terms of the gray volume growth for FY25?
So you see, we should close anything around 16.5 million tons in this year by March 24. And the government, as we said earlier, incrementally you could say minimum 2 million tons coming each year in FY25 and FY26. Incremental volume.
Thank you.
Hello?
Yes, sir. So the participant has left. We'll ask him to join the queue for follow-up.
Okay.
Thank you. You may please press star and one to ask questions. The next question is from the line of Aman Agarwal from Equirus. Please go ahead.
Yes. So thank you for the opportunity, and many congratulations on a strong set of results once again. Sir, our grey cement, while I understand grey cement business has been doing very well, just wanted more clarity on how the white business is doing. Last you mentioned there was some realization cut, especially in the putty business due to steep competition. Just wanted an update on that. How's the current scenario?
So, the white business, there is a stiff competition in the white business, especially in the putty segment. And though we have been growing, if you look at the white business, that has also grown by about 5% in the 9-month period, if you look at over year on year. So with April December 22 to April December 23, there's a 5% growth. Yes, the profitability, I would say that the white cement is more or less flat if you look at the whole business. So we are expecting around anything between 15 EBITDA margins of 15 to 18% in the white business.
Sure, sir. And sir, in terms of overall cost per ton, last call, you highlighted that you expect 50 rupees per ton kind of a saving in 3Q as well as 4Q. In 3Q 50, we have already posted a cost saving in excess of 100 rupees per ton. Would you be expecting further cost saving in 4Q on a sequential basis?
Yeah, there could be. See, again, Q3 has been exceptionally because some of the cost per ton, when you see net of the stock adjustment, is also because the freight adjustment is there when you value the inventory. But definitely we could see another, but major savings have been already effective. We may get some marginal savings, anything between 30 to 40 rupees in this quarter also.
Understood, sir. And sir, would it be possible for you to share your region-wise growth for this quarter or maybe 9 months 24?
No, we are not sharing those numbers.
Sure. Sir, I'll come back in queue. Thank you for the response, sir.
Thank you. You may press star and one to ask questions. The next question is from the line of Devesh Agarwal from IIFL Securities. Please go ahead.
Thank you for the opportunity, sir. So firstly, on the expansion itself, so you did mention that we are targeting by the end of FY26.
I'm sorry to interrupt, sir. Your audio is not clear.
Is it better now?
Yes, sir. Please continue.
Yeah. So, sir, on the expansion, just wanted some more clarity in terms of whether the land is available at all the location except for the greenfield. Will that be the case?
Yes, except for the Bihar grinding location, where we have identified a few locations, but we are still to close those locations. Otherwise, rest is in a way, brownfield expansions. So there are no land issues.
Right. And in terms of ordering, sir, what will be the targets?
Pardon?
For ordering?
So we have already started, getting the quotations, and I think we should be able to finalize all the orders also, the main plant and equipment within next 3 to 4 months time.
Understood. And so Bihar, sir, we have not finalized the location, right? It's still in works. Exactly
Pardon?
where the plant would be. In Bihar,
Yeah.
where exactly the plant will be, that is still in works. That the location has not
So
yet
we
been.
have 2, 3 options, so we are just working out, and we shall freeze the same within next 2, 3, 4 months. See, again, once we get the land and we simultaneously get the approval, environment clearance and all, so that the land acquisition and environmental clearance should take about anything between 6 to 9 months. And we feel that we can commission the grinding unit, within a span of 12 months.
Right, sir. Understood. And sir, if you see the share of Central India in our total volumes is kind of increasing. Just wanted to understand the difference in the profitability between North and Central India.
So now see, again, Central India, though, the pricing is a bit lower than what it is in the northern region. But there, because the plant is a new plant, so we get the plant efficiencies and we have a subsidy benefit. So more or less, we can see that the profitability of Central and North is more or less the same, considering we get the benefit of the subsidy in the region.
Understood, sir. And sir, finally, what is the update on the paint business? How much has been the revenue and EBITDA, and what will be the target for FY25?
So as we already said, yes, we are working on the paint business, and we have been able to ramp up the volumes. If you look at in the 9, we have already crossed a turnover of 100 crores in the 9 months. So, and now we feel that we should be able to close the year somewhere around 150 crores plus as a top line. So that was, this is, we, after launching, the JK Max sometime in the beginning of this year, in a small way, and then ramping into our main core markets. So we are getting a good traction, and we feel that, it would definitely be over 150 crores, because if you look at the paint we have done around 46 crores in quarter 3 itself, and so we expect around 150 crores plus. Yes, there would be, because of the one time, as I said, we have to develop the brand with the branding cost. There would be an operational loss. Anything ranging from 15 to 20 crores was our plan. What we estimated could be 20-25 crores could be our loss. So in the up to in 9-month period, we have incurred a loss of about 15 crores on the paint business. But that is nothing exceptional. When we are, if you look at, we are monitoring the business on gross margin basis, and there we are at the level where what was planned.
And for sir, FY25, any numbers that you can share in terms of profitability?
So FY25, we should have a top line anything between 250 to 300 crores. And, as far as profitability is concerned, again, it will depend on how there will be a marginal profit or loss, because we need to build up the brand. It would actually become EBITDA positive in a way in FY26, when we are closer to a 500 crore top line, 400-500 crore top line.
Thank you, sir. You may press star and 1 to ask questions. The next question is from the line of Patanjali Srinivasan from Sundaram Mutual Fund. Please go ahead.
Am I audible, sir?
Yes,
Yeah.
sir.
Yeah. Firstly, congrats on a good set of numbers. I just have a few questions. One is on gross debt. So post our CapEx, what would our gross debt levels be at the peak in the next couple of years?
So, see, our present gross debt, is around 4,600 crores. And, post, we are, by FY26, if we see, it should be around 5,500 of some. See, we are going to borrow about 1,850 crores. But the 2 years we will end up repaying about 800, 900 crores of debt also. So, incremental increase would be around 1,000 crores of debt. So, we could say we can peak maximum up to 5,600 crores as a gross debt.
Okay. Sir, and white cement, the realization seemed to have increased from the previous quarter. Is it possible to quantify what the increase was?
No, see, realization increase, when we're talking about it's a total white cement, it's a combination of when we talk about it's a product mix change and other things. So exactly, see, as far as putty is concerned, definitely quarter on quarter there is some pressure on the pricing, but there is a product mix change where it is showing, marginally higher realization per ton.
Okay. So does it mean that we've been selling more of specialized products or something, which is why the realizations have gone up a bit?
It's a combination of everything. It's specialized, we make shield max of premium putty and other products. So, and this was a seasonal quarter, so it depends on that.
Okay. Sir, and just one last question. What is our energy cost per kcal?
It's ₹1.80.
And we see it going down by how much in the next quarter?
Marginally, because we already have inventory at this rate, so I don't think so that in this quarter there could be some marginal difference, not anything. The petcoke prices have reduced and we should see some reduction, but it would be seen only in the first quarter of next fiscal, because this is based on the inventory levels. We are more dependent on imported fuel, so we have 60, 75 days inventory with us.
Okay, sir. And just one last question, if I could squeeze in. What is our WHRS and renewable targets for 25-26?
So on WHRS, see, again, a new WHRS plant at Muddapur is in advanced stage. Means it's actually under trial runs. So that will get commissioned and that will add next quarter. So in the next quarter we will start seeing the benefit of partially in this quarter and fully in the first quarter of next fiscal we shall be seeing. So our present
present WHRS capacity is 64 megawatts. So that will go up to by another 18 megawatts at the Muddapur. And then we will have the WHRS in the new clinker line 2 at the Panna also. So means
we will be
solar and wind. We are doing the regular tie-ups, and we hope to increase it by around 50 megawatts, 50-60 megawatts every year.
So related to that, I saw something in our presentation which said 22 megawatts agreement till 31st March 24. What does it actually mean, sir?
So that agreement, that tie-up will expire by that period.
Okay. So will we renew it, or how does it is it at our option?
New tie-ups also.
No, actually we had some short-term tie-ups.
Yeah.
Now we are entering into a long-term PPA agreements. So in between we had a short-term tie-up also, which was included in that.
Yeah, I just wanted some number on how much we'll target for 25-26 in terms of renewable.
So see, 25-26 in terms of renewable, we should definitely have. I think we can take around additional 50 megawatts for sure, of which 25 megawatt will be waste heat by FY26 because line 2 will have that waste heat, and incremental solar power of another 25. So we could see another additional 50 megawatts coming up in FY 25-26.
So this is in addition to our Muddapur 18 megawatt, right?
Yeah, this is in addition to
Yes.
Muddapur.
Okay, sure. Thank you so much, sir.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi, good evening. Thanks for the opportunity. So, on Central India subsidies, how much was booked in this quarter?
So, each quarter for the company, total subsidy works out to around 26-27 crores per month. It's about 80 crores per quarter. 75 to 80 crores per quarter.
Okay. And, what is the total quantum of the available fiscal incentives here?
So, we expect that for total quantum, it varies, in Panna total is about 300 crores, which we will get. And then there are fiscal incentives which are available for the grinding locations, different. So, year on year, we should get around 300 crores for next few years.
Okay. And then Panna phase 2 will also have incentives again, right?
Yeah, so we shall be making an application and hopefully we should get.
Got it. And in terms of the peak net debt, you said, I think 5,600 crores is gross debt, right?
Yeah, that is what presently it is 4,600. So I said incremental 1,000 crores should be there. But that is what we see as a peak debt.
Okay, understood. And also in terms of the paints revenue, you, I believe, booked some revenue in standalone business as well. What would be that quantum for Q3, 9 months?
So that is around 26 crores exactly.
Okay, and that would be getting clubbed into that white cement putty revenue, correct?
Yeah.
Okay. And is there some EBITDA also of this, or should we consider it to be neutral on EBITDA?
No, there is no, see, as a paint, when we talk about total, in the standalone results, there could be some marginal EBITDA, but it could be zero. Balance the advertisement goes into the max business, in the paint business itself.
Right. And lastly, on the Toshali acquisition, is there any update?
So, as the Toshali agreement, we are still in dialogue with the state government and the owner regarding transfer of mining lease. So, the state government also had concerns, with respect to that, giving Toshali on our confirmation on buying out the Toshali. So, we are actually working at that, and because we are also simultaneously working at an arrangement for a long-term tie-up for the limestone pending the allocation of the mining lease. So government is also considering that in case the transfer of mining lease may take some time, they can assure a long-term supply of limestone, and whether the company would be in a position to consider that as an alternate option for the interim period till the limestone mines are transferred.
Sure. And just the last question on employee cost. I believe there was some increase this quarter. It looks like some incentive has been, some employee bonuses.
So the employee cost increase is there because, we have a variable pay option, and it had a component on so since the targeted profit is being achieved, so there is an incremental provision for the variable pay which has to be paid.
Okay. And the fourth quarter, will we see a similar number?
Fourth quarter number could be marginally lower because this has an impact of the previous additional impact is there in this quarter.
Sure, I'll come back and give for more questions if I have. Thank you very much.
Thank you. The next question is from the line of Jyoti Gupta from Nirmal Bang. Please go ahead.
Good afternoon, sir. Thank you so much for the opportunity. Good set of numbers. I would like to understand, given the capacity breakup between grey and white cement, can I assume that we did 1,200 EBITDA on grey cement and roughly around 2,400 EBITDA on white cement?
Pardon, we are not really sharing the EBITDA numbers separately for both the businesses. You may derive at whatever basis you are calculating.
Okay. So, I basically, based on my calculations, I believe that is where the number should be close to. And second, on the expansion plans, effectively my gross numbers are quite close to. But in terms of where do you see the volume growth going forward in terms of the entire overall India cement growth? Since every company is expanding their capacities, do you think the demand going forward will commensurate the existing and upcoming capacities?
So see, the demand is also increasing. If we look at the base has gone, the incremental effective capacity increases not more than the demand. So we really see that that whatever is the incremental capacity that will get absorbed.
Okay. So what kind of base are you assuming for demand, all India demand, or maybe in the markets where you are actually operating?
So we see a demand, a growth in demand of anything between 7 to 9%.
And with that 7 to 9%, where specifically in the markets where Sri Ultratech are also very, very active, and the capacities are going to be significant, additions are going to be there. You believe that it is self-consuming. The market will consume all the upcoming capacity. So which means
so far it has happened, and we feel that yes, it would be.
Okay. Sir, on the fuel front, I would like to understand, since there's been a significant drop in your fuel cost, I would also like to understand, will this remain consistent? If that is so, then possibly I can expect a 1,200 EBITDA in the fourth quarter, around the same levels. Not at the same at 1,300, but maybe around 1,200 levels is what I anticipate in the fourth quarter. So will there be any changes in your fuel?
See, again, you said fuel and EBITDA. EBITDA is a combination, it's not related to the fuel price variation. Definitely there will be some, we feel that, as I said earlier, we already have some inventory which is at par with the fuel cost of Q3 average. So we don't see a major drop in that count. And EBITDA is a combination of other costs as well as the main is the realization. So as of now, the realization in the current month is marginally lower than the exit of the third quarter. So we are definitely, not that we do expect some price increase to happen, but if it does not happen, then it would be difficult to comment on anything on the EBITDA per ton.
Okay. All right. Okay. And the other thing is, I would like to understand in terms of the WHRS, you will be adding additional 50 megawatt in the next 2 years, which is by FY26.
So WHRS, actually, we shall be adding incremental of 43 megawatts. 18 megawatts is being added, is under already trial runs. So at Muddapur, and 25 megawatts of WHRS is being added, is proposed along with the new expansion at Panna.
Ma'am, I would request you kindly rejoin the queue for follow-up questions. Thank you. The next question is from the line of Naveen Sahadev from ICICI Securities. Please go ahead.
Yeah. Good evening, sir, and thank you for the opportunity. Heartiest congratulations, sir, for such a strong set of numbers. In my estimates, we could certainly be higher than industry leader UltraTech Cement for the quarter. My question was, I understand pricing is dynamic, and on the cost front, we have waste heat recovery as the benefit coming in the next quarter. Apart from that, are there any more levers from a cost rationalization or a revenue optimization point of view, which will ensure that we keep up with this lead over the industry?
So, see, WHR is there, but we will not see the benefit. The benefit will not be at full for this quarter. We would be seeing the full benefit of WHRS from in quarter Q1 of FY25, because it is under commissioning, and by the time it stabilizes and other things, it may take some time. On the other cost, yes, there could be on fuel, as I said, though we are trying to, there could be some fuel and other costs of around 30-40 rupees a ton incremental saving could be there. Beyond that, we do not see any savings immediately in this quarter. Regarding the pricing, yes, though we are trying to work out on the other mix. At the same time, we need to also see our new markets of Eastern UP, which is necessary to be developed, looking to the Prayagraj expansion, which will get sometime by end of second quarter of FY25.
Understood. Helpful. So the other question was on the overseas operation. So we were just simply doing a difference between the consolidated and standalone EBITDA, and you also said that paint was a loss of around 5 crore, roughly, as you said, for the quarter. But yet the difference is a decent 16.5 or nearly 17 crore. So wanted to understand, is there anything similar to the previous quarter, which wherein there was a one-off export opportunity of clinker to Australia, if I recollect, or this is more sustainable sort of a recovery or margins in the UAE?
So Fujairah operations, as we told earlier, we have been trying to work out on a turnaround plan for the Fujairah operations. The operations are also adversely affected by very high fuel cost and because of high logistic cost. The things are becoming normal over there. There has been a reduction in the fuel cost. We are also working out on the other value-added products, so which have also now given us some positive revenue. So in this quarter, Fujairah also we have earned. There is an EBITDA somewhat similar to Q2. In Q2, the EBITDA for Fujairah was about 25 crores, and in this it is 21 crores.
And sir, how sustainable is this is my broader question, because historically, as you said, multiple reasons.
So again, we had some good, some one-off volumes also, but I think as we are seeing Fujairah, anything annually we should be able to, though we are trying to work out on a plan in Africa, and which may take some time, but there are other, restrictions, other cost restrictions which are being imposed in UAE. But on a consistent basis, if things remain normal, we do see that, we could not at this pace, but definitely on an average, around anything between 30 to 40 crores annually could be sustained at Fujairah.
Oh, great. That will be a much better scenario versus the past. And just one last question. Freight cost per ton sequentially increased. I think, of course, there was a busy season surcharge on rail that came back. But is there more to it, in the sense that since we are looking to probably develop those eastern UP markets, as you said, or maybe Bihar, because grinding units we are eventually going to set up there. So is there an increase in lead distance? And is this number then to be...
There is an increase in the lead distance also. So one is a busy freight. There is an increase in lead distance. Lead distance increases on account of servicing new markets. There is a change there's a mixed change. This south, where the lead is still lower, there was a volume was marginally lower over there. So all these factors were there. So these are the two major factors, and one other thing is that there has been some inventory increase which has, which is again an increment adjustment which gets on a particular day. Some freight gets shown as an expenditure and is part of the stock valuation. So, but if you look at the major two counts, one is the busy period, because of railway freight, and there is an increase in the lead distance.
Thank you. Sir, I would request you to kindly rejoin the queue. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good evening, sir. So first question is,
good evening.
Is it possible? So is it possible to get the breakup of this 2,800 crores in terms of grinding, clinker, WHRS, some sort of breakup if you can share?
So, see the breakup of 28 crores, if you look at the grinding stations in Bihar, and the expansions which we have to do could be around 600 to 650 crores, and 2,200 crores would be, the amount which will be spent at Panna, including WHRS.
Okay, understood. And so since we're entering Bihar, what sort of, what's the strategy, in terms of new catchment area versus further increasing our penetration in existing? So does Bihar will be servicing the entire new market?
So Bihar would be a new market for us. Presently, we are not selling in Bihar. So, as a new catchment, when we set up Panna, so there was similar, there were new markets in MP and UP, which we have, which we are catering. So we will have a similar plan, to enter into Bihar and the new markets. We would be planning to consolidate on new markets.
Okay, and so this announcement was kind of anticipated since a while. Now can we assume, in future, we've kind of reached out as far as Panna expansion is concerned. Future expansion will be either in some other location or a greenfield plant?
So as I said earlier, we have 2-3 options, and we would, looking to the market scenario, we have an option for an expansion in the north at Jaisalmer, and we have an option for an expansion in the south, where we are already operating at a very high level of capacity utilization, and also option for line 3 at Panna, and if something works out for Toshali, that's an option. So these are the 4 options which we have, and I think by the time we are able to we are in advanced stage for completing Panna line 2. We would have a clear plan where we need to go next.
Understood. And just one last clarification, sir. This year you said around 16.5 million ton volumes for grey. Out of this, how much would have been contributed from Panna? I mean, just trying to understand overall average year, what utilization would be operating at.
So Panna, is already would be operating at 75-80% capacity utilization. 75%, so definitely 75% capacity utilization would be at Panna.
Sir, please rejoin the queue for follow-up questions. The next question is from the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Hi, sir. Good evening. Am I audible?
Yeah.
Yes, sir.
Yeah. Congrats, sir, on a great set of numbers. I have a few questions. First, on the expansions, this grinding expansions which you're doing in brownfield. So, are they actually adding some balancing equipment, or will it be a separate grinding mill which is getting added?
No separate grinding unit. It is in the existing unit itself, some upgradation. We have a scope in the design, and followed it by adding additional packing system and cycle.
Okay, and the capex number which you mentioned for FY25, if I heard it correct, 2,200 crore, and next year then the remaining around 1,800 crore.
Yeah, so 2,200 crores which was set for FY25 included, the capex for the expansion at Prayagraj. So it included the Prayagraj grinding unit which will get commissioned in FY25. It included some out of the capex of spillover 200 crores out of the current year. The current year plan was 1,400, and we should close around 1,200. Some normal capex and about 1,300 crores of the new expansion expenditure.
Okay. And on the operating metrics, you posted strong numbers, but I see two things. Your non-trade mix has improved significantly. Trade mix has come off quarter-on-quarter from 69% to 62%. And the panel check suggested central market realizations were relatively flat Q-on-Q. And also there is a large inventory, negative inventory adjustment, negative inventory numbers, stock adjustment. So can you explain what was this? Where did you benefited on the realization despite large non-trade sales and this large inventory number?
See, number one, we would like to emphasize that we have been able to maintain our market share in trade across all markets.
Okay.
So, we have not lost the market share when we talk about in terms of the trade sale. In fact, in the new markets, in the new markets, we have even further improved upon our trade share over there. If yes, the non-trade volumes percentage has grown, because if the incremental demand and the opportunity is coming from non-trade, to get the incremental volume, you will have to sell in the non-trade segment.
Correct. So our thought was that if you're selling more in non-trade, you will gain on volumes for sure. But
I'm sorry to interrupt, sir. Your audio is not clear right now.
So actually, Rajesh, in this quarter, the pricing was better than the previous quarter. That's why we have seen improvement in the realization.
And so this inventory adjustment number, could you
So
explain
that is the clinker stock mainly. See, last quarter, since our maintenance was high as a normal, because Q2 normally we have the maintenance, so clinker stock had reduced. Now we have come to the optimum level again in this quarter.
Okay, so nothing one-off.
Yeah, nothing one-off.
So last question is WHR you are doing for 3.3 million ton, you mentioned around 25 million ton WHR. So is it some surplus, because usually we used to think a 3 million ton odd would suffice at max 15 megawatt of WHR?
No, it's not that. We already are having a 22 megawatt of WHR in the line 1 at Panna.
Correct, but optimal utilization is possible with what level? With 3.3 million
Your
ton.
voice is not clear actually.
Sorry, I'm saying with 3.3 million ton, what is the optimal generation you can do? All this 25 megawatt is possible?
Yeah, it is possible.
Thank you, sir. I would request you to kindly rejoin the queue. Ladies and gentlemen, this will be the last reminder for the questions. If you have questions, you may please press star and one, and further no reminders will be given for the same. Thank you. The next question is from the line of Prateek from Jefferies. Please go ahead.
Yeah, thanks for the opportunity. Most of my question is answered. Sir, first question is on green energy mix. Just to get a number, while you talked about megawatt installations, both in solar and WHR, so 50% of FY24 YTD is expected to touch what number, maybe by FY26? Like some of the peers have talked about 60% number by FY26.
So if you look at, the green power, presently when we are at 50%, I think by FY26 we should be closer to about 60%. Definitely.
And one of your erstwhile presentations talks about 75% as probably a more long term.
That is the
target for 2030.
That's the target for 2030.
Right. On realizations, so this 26 crores which you have booked in standalone business for paint, was this a similar number last quarter also? Because your total 9 months you said 100%.
Last quarter was 19 crores.
19 crores. So there's small benefit of reported blended realizations in white cement because of paint also, but not so material.
Right.
Sure. And sir, this last question on freight, you talked about some increase in lead distance because you're building new markets. So this 1290 number, is this expected to sort of sustain, or there's some one-off particularly in this quarter?
So I think quarter on quarter it should be sustained because the railway surcharge would be similar, so it will not have any impact. The lead distance also, I think there should not be any major increase in the lead distance. So I think quarter on quarter should be flattish.
It would remain higher, like last year we were 1220 on an annualized basis. It will probably remain at this closer to 1300 going forward.
The same as this quarter, I'm saying.
Sure. Okay. These are my questions. Thank you.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Couple of questions. Sir, first is on how one should look into the cement clinker ratio from now to FY26. Looking at the capacity, I think you indicated a number of 66% for the quarter.
So we could see anything ranging between 0.62 to 0.64.
Okay. And sir, what gives us confidence over here? Do we already have tie-ups on fly ash, slag, or is it like the GUs are already in proximity that gives us confidence?
Yeah. So see, there is already a tie-up for all the existing grinding locations, which will also include the brownfield expansions at Hamirpur and Prayagraj. So only the long-term tie-up, which is under negotiation, has to be done once we finalize the location for the Bihar unit.
Okay, that helps. Sir, are we looking at LC3? Few of the companies have indicated that they are ready for commercialization. Any thoughts on calcined clay as a product?
Yeah. So we are also, actually we have done a trial production and all, so we are definitely looking at and see how we can have that as a commercial option. So we are there already at it.
Sir, any timelines?
No, timeline, see, one, you can again do it, but we have to see, unless we have a proper commercial model. So that has to be seen on the demand supply, on the timelines will depend on that.
Okay, but the product is ready for us, so hypothetically, if you want to launch
the product is more or less ready for us. We've done the test.
This is helpful. And sir, last question, any specific reason to go for Bihar? Why not any other states?
That's a natural growth, that's a natural once we go from east. So that's a natural market. We have no other option from Panna to go to. That's the natural growth market area.
This is very helpful, sir. Thank you so much. All the very best. Thank you.
Thank you. Ladies and gentlemen, on account of time constraints, this will be the last question for today, which is from the line of Sonal Bansal from Eureka Stock and Share Broking Services Limited. Please go ahead.
Congratulations, sir, for the fab results.
Thank you.
I would like to know, how do you see the price movement in North and Central region in the next 2 quarters?
So actually, we are expecting that some price increase should take place in this quarter. So, if it takes place in this quarter, it will be good. Otherwise, the first quarter may be difficult because of the elections and other things.
Okay. Thank you, sir.
Thank you. As that was the last question, I would now hand over the conference to Mr. Vaibhav Agarwal for his closing comments. Over to you, sir.
Yeah, thank you. On behalf of Phillip Capital India Private Limited, I would like to thank the manager of J.K. Cement for the call, and many thanks to the participants joining the call. Thank you very much, sir. You may now conclude the call. Thank you.
Thank you very much,
everyone, for joining.
Thank you.
Thank you. And if you have any other questions left, you can contact us directly.
Thank you very much, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.